Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar, editor for markets on Business Today TV. Well, you all remember that the Nifty had staged an impressive recovery in the last hour of trade on August 14 to recoup the day's losses and to close in the green after a day of volatile trade. But then the headline retail inflation post the market hours came in at 7.44%. The big question then, will the markets extend the recovery or will higher than expected inflation really play spoil sport today? We'll discuss all of it, but first up the top headlines this morning. Indian stocks are likely to feel pressured on Wednesday as persistent weakness from overseas dampens local sentiment already hit by consistent FII profit booking and disturbing macros. Bulls on the Dalal Street will have to grapple with July CPI inflation surging to 7.4% and index for industrial production slowing to 3.7% for June as India's macro picture gets muddled with the soaring vegetable prices coupled with weak factory output. Very good morning to all of you right there. Well, India celebrated 77th Independence Day yesterday and the sentiments were higher as far as the consumption trends are concerned. We were reading reports of how the festive sales of Independence Day really have seen, kind of 25 to 30% surge on a year-on-year basis for a lot of electronics that were up for sale all across the platforms on e-commerce as well as the offline market as well. But when we talk about the Nifty, clearly remember that the Nifty received a support at the 50-day exponential moving average on Monday, leading to an intraday rebound on Monday. But the big question is, will retail inflation really dampen any hopes of a Nifty 50 rebound? Now you can see what the update was. So the Nifty and the Sensex managed to recoup the day's losses, flattish trend to a positive bias for the Nifty at 19,934, the Sensex at 65,401 as well, up about 0.1% in trade. It was the Nifty Bank that could not provide that much of a support. We did see a negative closing for the Nifty Bank on Monday's trading session. Look at the India VIX. That's also been on a rise again. That's been increasing kind of volatile moves on the markets, especially. Of course, this week again, we are going to be seeing the expiry on the weekly basis tomorrow, and that's going to perhaps also see some kind of movement in today's trading session as well. Now, when we talk about the Nifty Bank as well, particularly, remember that after briefly slipping below the 44,000 mark for the first time, that is, in nearly 2 months, on Monday, the index eventually managed to close above it. However, remember that the Nifty Bank did fall for the 4th day in a row for the first time in a month as well. So that's also important to watch out for. F&O cues will also be dictating the trends. But when we look at the global cues, for example, what's the handover that we've got? Of course, the US indices, let's look at those. They ended sharply lower on Tuesday, and that's after the stronger than expected retail sales data that actually raised the concerns that interest rates could stay higher for longer. Remember the S&P 500, it declined about 1.16%, and that's below the 50-day moving average for the very first time since the month of March. On the other hand, when we think about the Dow and the Nasdaq, we did see even these indices declining about over 1% each at 35,946 for the Dow Jones, and the Nasdaq also ended the day at 13,631 as well. But also what's very important for us to understand is how the banking stocks in the US were also sharply lower, and this was following the Fitch ratings that has actually warned that the US banking industry has actually inched closer to another turbulence as well. In fact, Fitch has also talked about a risk of rating downgrade on dozens of US banks that could even include JP Morgan Chase as well. Apart from this, we've also seen the European markets ending lower, the Asian markets lower, and the gift Nifty also pointing to a negative start today. Shail Bhatnagar now joins in. Shail, very good morning to you. I want to first begin by understanding from you on the Nifty specifically. We did see that rebound in the last hour of trade as well. And the Nifty did receive some support at the 50-day exponential moving average, leading to that rebound. But the big question is now that, higher than expected inflation has come in, will that dash the hopes of a Nifty 50 rebound today?
Good morning to you, and hello to everyone who's watching us on this wonderful Wednesday morning. We are sitting on T-1 as far as the weekly expiry is concerned, and bang in the middle of the month. So from now on, in any case, options premium practically will decline for all options buyers. So let's now analyze this sensibly. In front of you is the daily chart of the Nifty, and you will notice two things. One, a very sharp dip towards 19260 was purchased on Monday, and that is a sign that the 50 DMA has been tested. Now this is also the lowest level that you will see since say the 7th of the first week of July. Now there are two interesting things that are happening as far as the Nifty is concerned. We've corrected from say the psychological level of 20,000 to about 19,250. That's about 750 points taken away by the market, which is fine. The 50 EMA on the Nifty has been tested, and it's bounced back very sharply. Now that was data that was for Monday. What has happened subsequently is that consumer inflation prices have skyrocketed to 7.44%, primarily led by vegetable prices. So that's a big negative. And worse, the index for industrial production for the month of June, it comes with a 2-month delay, is just 3.7. So these are two double whammies that are coming in. And before this, we were already grappling with our foreign friends turning net sellers. The figure for Monday is more than 2,000 crores, and for the month of August, it's about already more than 9,000 crore rupees. So these are worries that are falling very heavy on the shoulders of Nifty, and that is a very painful thing that is coming. We've seen over time that the trading range is slipping lower and lower, lower and lower. And if you look at the options data, now it's 19,300 to 19,500. So what was a buy on dip strategy is now slowly turning into buy sell on rallies. So this rally that you see that's happened to 19,434 on Monday's close is likely to be sold into, and Sakshi, as she's pointed out, you are seeing weakness creep in from the gift Nifty point of view. So I would imagine we'll again test the 50 EMA, which is 9250. This is not a market for traders if you are not professionals as far as trade is concerned. So it's going to be choppy, it's going to be volatile, it's going to be moving towards both sides, upper and lower. So mean reversion intraday is what you're looking at, and that's a very, very painful thing to trade. I would imagine it's best to stay away. But what's interesting, Sakshi, is that while the Nifty is corrected 750 points from its peak, there is zero correction, absolutely zero correction in the indices of small cap and mid cap stocks. And that's where the market is concentrated. So if 50 EMA holds on the Nifty, I would imagine the trade will reverse in favor of blue chips, because they've become more attractive compared with what they were 1 month ago, and mid caps, which have become more expensive, more exuberant. Similar is the story with small caps, will now see some profit booking. So sensible traders with an eye 1 month, 2 months down the line will now look at select blue chips which have corrected sharply and may book profit in mid caps. Sakshi.
Exactly, Shail. But what about the Nifty Bank now? What are you watching here? We did see the index slip below 44,000 mark for the very first time in nearly 2 months on Monday. The index did manage to close above it, however, but it was the fourth day in a row that in this month, for the first time, that this index really fell. Your thoughts here?
So those are very good data points, and as we've maintained so far, that the bank Nifty is weaker than the Nifty. What you see is a 100 EMA test that happened on Friday and on Monday, and there was a sharp bounce from those levels, although the bank Nifty still closed 100 points lower at 44,090. Now the problem here is that despite stellar earnings from all frontline and all smaller banks, the bank Nifty refuses to move up, and that's because of fears that interest rates will now remain heightened both domestically as also overseas, that you pointed out in your US chat, and the fact that you might see a downgrade happening on by Fitch on American banks, which also, by the way, came up with sterling earnings. So it's an overall sectoral weakness that's creeping in despite fantastic numbers. So it was a sell on rally then, it's a sell off rally, sell on bounce now. So it's testing the 100 DMA, and let's see what happens today. But weakness persists because of incremental additional CRR, whether it's interim or not, we'll see. And of course, IIP and CPI have been out of whack with long-term averages. So these are the two weaknesses that I see. Here again, the option data is pointing to slipping ranges lower, 43,800 to about 44,500. Sakshi.
The F&O front, Shail, again tomorrow will be the F&O expiry for the week. Your thoughts here?
Of course, as you rightly pointed out, Nifty and Bank Nifty options will expire on Thursday, and of course we are in the middle of the month, so premiums from now on will how should I say, move faster towards zero as they normally do in the second half of the fortnight. So that is one thing to be taken care of. The other point that I wanted to mention, Sakshi, is that there have been some out performances as far as the F&O space is concerned, and let's look at it from the point of view of data that's coming in. If you look at how mid caps have done, they've performed substantially better than large caps, and that is where we see a lot of traction coming in as far as F&O stock futures are concerned. And the stocks that I'm looking at, just a moment please, there is some issue with my system. Just let me reload these for a moment and I'll come with you. Yes, so in the metal space, NMDC, very sharp traction coming in, 4.5% higher, Sakshi, and very strong delivery statistics, 2x up, as also a sharp increase in open interest by the point of 5.5%. The stock has bounced off its 200 DMA, so that's a very big plus. Gadar is creating Gadar not only on cinema screens but also for PVR Inox, 1720 on the charts with you, and this is accompanied by a drop in open interest. So it's short covering that's happening on PVR Inox. We've seen multi-month highs coming in here, and data for Gadar will also add a nice green tick on PVR Inox. We've seen extended holidays the previous weekend, even yesterday, and the theme was very close to Independence Day. So that is happening. And two or three other favorites, the entire IT pack should start looking up. Infosys and HCL Tech have won orders. Therefore, I'll also look at Infosys. Short covering happening here. It was enough pain for IT over the last 2-3 months, and IT is likely to act as a very strong support for Nifty around its 50-day moving average. Therefore, Infosys, and old favorites like Canfin Homes. I'd also keep an eye out on Indigo. There is a block deal likely for 4% stake for about $450 million from the family of promoters, and that should be around 2,400 rupees, which is a discount to the current market price. These are stocks that I'm looking at on the long side. Sakshi.
Absolutely. Let's also welcome our guest for the day. Gaurang Shah now joins in, Senior Vice President at Geojit Financial Services, is with us. Very good morning to you, Gaurang, and thank you so much for taking the time out for this discussion on Business Today TV with me and Shail. First up, your thoughts on the kind of global cues that we've been getting. The US, European markets all lower, Asian markets trending down as well, especially in the US now with the concerns emerging on the banking front now. The stocks ended sharply lower. Fitch ratings warning the US banking industry is inching closer to another turbulence, risk of rating downgrades on dozens of US banks as well. So the concerns emerging for the banking space, what kind of spillover effect can we have in the Indian markets particularly?
Thank you, Sakshi, and morning to you and my good friend Shail. So I think let US take care of their own mess that they have created over a period of time. I think they deserve to do that. And I have always been a believer that anything happens in China or developed market is a huge positive for India. So rather than looking at things as glass half empty, I would rather look at it as glass half full. And I am also of an opinion that if these problems persist in the US or in other developed markets or in China, I think it is advantage India. I would simply put it that way because fund managers across the globe would want to put money in economies, in growth stories where they get a decent return over and above than what their cost of funding is. So I am extremely positive about India. I think the US is to be blamed for the mess that they've created, be it Signature Bank or be it any other bank which has gone belly up. And then, bigger banks have tried to bail them out, effectively putting good money behind bad money. That's what my thought process is, and I stand to be corrected if I'm wrong. So, and there are problems over there. Not 1 year, 2 year problem. There are decade-old problem which has cropped up, and they always believed in one thing: is just go ahead and print dollars. That does not really work that way. I think the more dollars or the more currencies, whichever country it is, not only US, if you go on printing currency or dollars or rupees or currencies, there has to be an end point wherein you will have to face the music. So I'm not saying that we'll be totally insulated from the external shocks that the world throws at us. We would be. But my sense is that any lower level closer to 19,300 or maybe a little bit below that, where we've been last week and the week before, I think these are some good levels to go and nibble in. And mind you, we have already corrected 3.5% from the highs that we've seen of 19,991. So before the world corrected, we have corrected. And before the world starts recovering, we will recover. That's the growth story, I believe.
Good morning and namaste. Welcome to Business Today Television. What a fine morning to have you at a time when we've seen prices correct decently as far as frontline blue chips are concerned. Now is also the time, to look at stocks which have come off their highs, come off the enthusiasm, and come off the sheer giddy valuations that they had about a month and a half ago. Should you be setting up a portfolio? What are the one or two stocks that you would look at in terms of adding to the portfolio via systematically investing over them on a monthly period?
Well, I have always been a believer of creating portfolio when the markets correct. And unfortunately, the human tendency is not only in India, across the globe, is the herd mentality. Markets going up 500,000 points, you will run to the stock market to invest money as if there is no tomorrow. Similarly, when the markets correct, you will run even faster to go and sell your stock as if there is no tomorrow. So I think you have to change this approach. When the market corrects, I think if you have a long-term time horizon, these are great times. So I have two investment ideas this morning. One of them is an FMCG company which came out with its numbers very recently, ITC. And I think post the demerger of hotel business news, whatever correction that is coming, and of course on fallback of earnings that we saw very recently, it's a great opportunity to nibble into ITC. So that is the first one. And my sense is that after being an out performer in the FMCG sector for the last 6 to 8 months, the stock has now kind of matured. And our sense at Geojit Shell is that all the verticals on the balance sheet is going to fire up and start contributing to a greater extent. Leave alone the tobacco and cigarette business. I think all other businesses. The second one is from the public sector bank. Again, one of the underperformers, but earnings have been extremely well over the last couple of quarters. and that is the leading public sector bank, State Bank of India. Both these stocks, Shell, I believe the correction that we witnessed is a great opportunity to nibble into these two stocks.
And look at State Bank of India first. You have the chart in front of you, and as Gaurang very very rightly pointed out, you must buy stocks when they are in pain and when none of their financials and none of their other internal workings show any kind of pain. So you have State Bank of India trading at about its lowest levels since 27th of June, and the stock has corrected from 621 to 560. Of course, short-term markets are unpredictable, and one really does not know when the stock will reverse. But a simple systematic investment plan of buying one or two shares every month or every week will help you tremendously. Gaurang, you went through the earnings of State Bank of India on a quarterly basis. It is now India's most profitable company. Quarterly profit surged beyond 18,000 crores. Anything that you caught disconcerting in SBI's earnings, and what is the reason for this correction that we've seen from 620 to 560?
Larger than expectation on the number front, and of course, the run up that we saw, Shell, just before the numbers that came in. And I think it's more of that, uh, NPAs or gross or net NPAs would start rising up, provisioning will go up, margins will come under pressure because people are thinking since the inflation is high, interest rates might move up, etc., etc. But our opinion is absolutely on the flip side, and I always love to sit in the opposition when the larger vote is on one side, Shell. So my sense is that everything is priced in. Uh, Credit growth, we are extremely positive, and I'll tell you one simple thing, Shell. If India has to become the next trillion-dollar economy, which I strongly believe it will, then banking and finance will have to play a role, or they'll have to take the lead in terms of taking us to that next trillion-dollar economy. Because without credit growth, you are not going to be there. And credit growth is important. Liquidity is important for anything and everything, whether it is manufacturing or services. You need liquidity, and they are into business of lending monies and liquidity. So my sense is that liquidity will be credit demand will be extremely strong. Interest rates, our sense earlier was that by this year end December 23, you will see rate cuts coming through in a small fashion, but that we pushed it back to first calendar quarter, that is Jan Feb March 24, in case if the inflation has to come down sizably, that will give us a comfort. So, and your of course provisioning is likely to come down even further because of the recovery track growth. So I'm not really concerned about short to medium term speed breakers, but the long term growth story is definitely intact. So my only concern in short to medium term is that in case if these inflation numbers have to grow up, there will be a lot of noise in the street, Shell, as we are used to, that banking and finance will be in some kind of a trouble. But I strongly don't believe, we do strongly don't believe at Georgia. We believe long-term growth story is still in that.
Right. So here is what Gaurang's hypothesis is, that you might see short-term pain, and that's when you should set up a quality portfolio. So if you find SBI slipping over time, keep on adding. There will come a time when the stock will reverse and reclaim its previous highs. Gaurang, before we get into ITC and into pre-open, would you hazard a one-year price target on SBI?
I would, if you have to put a gun on my temple, I would say 720.
Oh, wonderful. We won't put a gun on your temple. We just make gentle requests. And again, I would like to ask you your tailor's name and address, which I'm sure you will message me in SMS. There are very few people in this world who are not on WhatsApp, and Mr. Shah is one of them. He leads a very calm, peaceful life, and that's the reason why he picks up such excellent stocks. Over to ITC. Gaurang, the market's not very happy with the way the demerger of ITC Hotels is planned. Be that as it may, this is a debt-free company. Where do you think this is headed 1 year from now?
I think 520 beyond. If I have to just pencil down the growth that they put, and let me say this, share. Company management are not under the obligation, or they don't have to oblige the way market thinks. They have to think in terms of what is good and what is bad and what is positive, what is negative for the company's growth. Market may want anything and everything. They would want the sun and the moon and the star in the sky and the heaven to come down for them. But that doesn't really work. I mean, management has to think in their own professional manner. And I think it was absolutely right. Yes, there was a lot of noise on demerger of some of the business as far as ITC balance sheet is concerned. Hotel business was one of them. It is done and dusted, but it did not happen in the way the stock market thought it would happen. And so the price correction. And not to forget, uh, last 6 8 months, this has been one of the top performers as far as the FMCG sector is concerned, Shell. So give it the run up and give it the demerger news, which did not come the way market expected it to be. Hence the correction. And I think 450 or anything below those levels are great opportunity to accumulate ITC. I think 520 and beyond could be the target. I'm giving a very conservative target, Shell.
Absolutely.
Gaurang, I wanted to ask you because, ITC has been the best performing, stock on the Nifty index in the last 1 year. From 15th of August, if we check last year to now, 45% of a surge is what we've already seen. So are you really being very, very conservative when you say 520? Because a lot of brokerage houses today have come out with the reports of even 530 and higher targets.
It is always to underperform when it comes to talking and overperform when it comes to deliveries. Sakshi, stock market is about all that. So I rather not. I don't want to, give some very fancy number on the high side and then possibly have a sad face. I think it is always better to be conservative in stock market.
एब्सोल्युटली, इसीलिए बाल सफेद नहीं हुए हैं गौरांग साहब। ये
अभी हो रहे हैं, अभी हो रहे हैं।
ये पिछले 3 दशक की जो मेहनत है ये आपको चेहरे पे दिख रही है, और इट इज ऑलवेज 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 better to conservatively estimate where the markets are headed, so that when they outperform you look good. But Gaurang always looks good. Coming back to pre-open trades, the Nifty is now flat about 19,436. Let me just share where prices have opened. I'll now move to FNO because there's a bit of a downtick in the markets, which I'm sure is temporary. We'll start with Infosys, 2.5% higher, 1420. ITC, 1.3% higher, 455. PVR Inox, 1.3% higher, 1736. High Beta Lupin, 1% higher, 1092. NTPC, 4.8% higher, 214.75. These are the ones that are most active. Nifty still flat, down a point, 19,428. Remember, this is a good opening because we were facing a lot of negativity in the market. Adani Ports is 10% lower, but we'll wait for this to recover. Apollo Hospitals 2.7% lower, 46.90. We've seen Cipla down a percent, 12.28. Hindalco down a 0.5%, 4.48. Remember, I'm talking about only high beta, and that is what makes sense. Let's look at where Reliance is. It's 1% lower, 25.55. HDFC 1.3% lower at 15.90. Axis and ICICI and Kotak are also mildly in the red. So it's a negative tick on the Nifty now, 45 points down. Let's get Mileen Vasudev in, Senior Technical Research Analyst at Arihant Capital. It's a wonderful jugalbandi that we are going to have between Gaurang and Mileen today. Good morning, Mileen. Your view on Nifty?
Is trading in a zone where it strong demand zone of 19,300 to 19,500 levels, and on Monday we saw that it breached that zone, but it has closed above it. And secondly, it has taken a support at the 50-day moving average line and a former positive candle. But at present, looking at the global clues, yes, we are going to open lower. But looking at the Reliance chart, I feel that Nifty is likely to head higher, and it may test the levels of going forward. It may test the levels of say 19,642. So I'm positive. I'm not negative on the market. it can bounce from current level because I'm positive on Reliance.
Right. Mileen, I wanted to understand from you on some of the stocks, especially ITC. That's one of the picks of Gaurang as well, and the company has reported, good earnings this time around. The Q1 profit rising 17.5% this time around, and of course the demerger news and the timelines over there as well. The stock has been one of the top performer on the Nifty index in the last 1 year. Your thoughts here? How much more steam do you see on ITC?
Let's see, currently ITC is trading sideways and with a negative bias. Currently, it has got some support around, say, 430 to 420 levels. But yes, there is no good setup at present. But one should wait for a positive pattern to form at a lower level and then only enter this count.
Okay. What about Infosys? Again, there's news flow here. A mega 1.5 billion euros deal with Liberty Global. Although the brokerage houses are not very positive post this announcements, as they do believe that this deal could be margin dilutive going forward for Infosys. But looking at the charts of Infosys, what are your thoughts here?
First of all, Infosys is underperforming the benchmark indices, so clearly it has got a lower RS. So we are not tracking very closely this stock. But yes, it has got good support at 1300 levels. If it holds 1300 levels, then again 1433 and 1470 could be possible. But this is not a recommendation.
Right.
Okay.
Um, Mileen, this is as good a time as any to discuss your two stocks which might be outperforming on the charts. What are you looking at?
Yeah, on Monday's trading session, we saw that in the latter half of the session, there was a good buying in AMI Organic, which is currently trading at 1300. The breakout level was at somewhere around 1257, and from there, that stock has given a huge breakout with huge volume and has closed at 1300 levels. So I would bet one can buy at 1300 levels, keep a stop loss of 1240. My target would be 1420 and 1480. The second stock which saw good buying was GRSC, currently trading at 657, one with a stop loss of 620 and a target price of 700 to 730.
Right, Mileen, let's work this backwards. And I'd like Gaurang's opinion on Garden Reach Shipbuilders as well. Mileen, first to you. We've seen an absolutely astounding rally on the defense plays, especially the three shipyards, Mastock, Garden Reach, and Cochin Shipbuilders. Very, very strong breakout, as you rightly pointed out yesterday on Garden Reach, 8.6 million shares traded, and of course, this is a record high. Are these levels which really, should worry people? The stocks, gone up 2.5 times over the last 18-20 months. Uh, is it overheated? Milen, this was for you.
Yeah, Shell, it is not overheated. I would say that this is a fresh buy entry over here because the risk reward ratio is very favorable over here. And even if you see the monthly charts last month it consolidated, and now that consolidated level is being crossed by good volume. So this clearly suggests that there is some steam in this stock, and you could test the higher levels of 700, 720, what I am expecting on this.
Right. Now let's get Gorang into this picture. Gorang, the chart is in front of you, but you pay more attention to the fundamentals. Is Garden Reach out of reach when it comes to how prices are moving? Of course, this is a public sector defense play, and we've seen a very, very sharp rally as far as markets are concerned. Are you worried that we might be getting into that enthusiastic, fluffy territory when it comes to stock prices of defense plays, especially Garden Reach?
So I'll answer this question on sectorial basis, Shell, if you will. Be it Mazgaon Docks, be it Cochin Shipyard, be it Garden Reach, be it BEL, Bharat Dynamics, uh, Hindustan Aeronautics, BHEL, all these companies, including some private sector companies like the Bharat Forge and the L&Ts of the world, uh, or Astra Micro, all these defense related plays, you need to have one thing absolutely clear in your mind is at least 3 to 5 year time horizon, because these companies take long to execute a large order which they receive either from the Indian Ministry of Defense or any other order which they receive from overseas market. And the reason why that delay is there, because these are high precision, high technology, very precise, products that they manufacture. Uh, you need to have longish time horizon. First, a prototype is developed, and then after the approvals come through, a mass scale production comes through. Large order book, the kind of large order book all these companies have, we are extremely sure that over the next 3 to 5 years, there is much more higher levels for all these companies to reach. There may be a time share like we saw in Hindustan Aeronautics Limited when it touched level of I think 3,900. A lot of fund managers offloaded the stock, and we saw a lower level of somewhere close to about 3,650 or 3,700. And from there, the stock has started to recover. So any run up which you see will be an opportunity for some long term players to offload, but that doesn't mean that the growth story is over.
Right. So, with the adequate checks and balances, you should look at the defense space. And I absolutely agree with Malin. Let's just see the daily chart of Garden Reach Shipbuilders, an absolute blowout that happened on Monday. The stock at a record high, and the volumes were fantastic. So, absolutely nothing wrong with the chart. But the fact is that at these levels, one needs to be very cautious when it comes to taking a sensible position on the long side. Gaurang has given you all the checks and balances, and Milene has set up a beautiful price target for Garden Reach Shipbuilders. It's opening mildly in the red at about, no, it's in the green at 659.85 after a stunning rally on Monday. And let's hope that Milline's price targets come into the picture. Let me just go back to the pre open trades and show you what all has happened so that we have a fair idea where we are likely to open. Nifty settles 65 points lower at 19,370 on the pre open trade, which are the stocks in pain. Reliance 1% lower, HDFC 1.73% lower, Axis Bank and ICICI Bank 0.5% lower. Apart from Infosys in the top 10 heavyweights, everything is in the red. Infosys opening 1.24% higher at 1410. Sakshi, what are the other stocks that you are looking at when it comes to pre-open?
Shell, let's look at M&M for example. Of course, over the weekend we did see, and over the holiday yesterday, a lot of movement as far as the news flow is concerned. So it's up 0.8% at 1559 right now. It has launched the Oja tractor platform in Cape Town, the first lightweight tractor from Mahindra Group, and it is going to target 3.7 lakh units, strong market in the US, in India, ASEAN as well, with the Oja tractor. Of course, a new identity as far as EVs is concerned. So M&M is going to be in focus again. One more stock, SJVN. Let's look at that stock. The company has signed a power purchase deal worth 7,000 crore rupees for 1,200 megawatts. Slightly up in trade. The stock had already reacted on Monday as well. 4% up it was on Monday. But remarkable rally over the last 6 months for this one as well, for solar power projects. That's another stock that one should watch out for. Indigo, let's watch out for this stock as well. Reports have suggested that the Gangwal family is looking to sell another 4% stake in the company through a block deal, indicative price of 2,400 rupees, and therefore you see this dip of 3% because it is at a discount to the last closing price, 5.8% discount to that one. So that stock is down in trade. But let's look at IIFL Securities. That stock is actually up in trade today, about 3.5% in trade. Another block deal has happened here apparently. So 4.5%, 5% up in trade at 68. About 1.2 crore shares have traded, exchanged hands, 3.9% of equity. These are the stocks that I'm watching out for, Shail. Anything else that you have on your
Okay.
list?
The markets have started to tick, Sakshi. Let's look at them. 82 points lower on the Nifty, 19,350. 405 points lower. A 1% cut coming in on Bank Nifty, 43,660. The IT index is in the green as expected, 4.2% higher, 31,100. Now, first look at what the heavyweights are doing. Infosys 1% higher. This is good news. 1408. Remember, this will provide support to much needed on the Nifty. Now let's look at the losers. HDFC Bank. Remember, we are tracking a short call on this, given to you on Monday. 1.75% lower, 1583. This is now around its 200 DMA. ICICI Bank 1.2% lower, 948. State Bank of India 1% lower, 554. Reliance 1% lower, 2553. Losses on the Nifty mount, 110 points lower at 19326. Remember, the first support is 19306. Infosys and L&T are in the green in terms of heavyweights, as also Gaurang's favorite ITC, 0.5% higher at 451. Since we have Nilin with us, without spending more time on the markets, let's look at how he's watching the market open. Milin, what catches your eye? Nifty and Bank Nifty in the red, IT in the green.
Shall actually, I would take little bit time for 5-10 minutes for market to settle, and then we could see some picks up in the market. But at present, yes, looking at the current price action in Poonawalla also looks good to me because we are tracking Poonawalla. So Poonawalla also looks good in this market.
Fine. Let me just point out some other prices. Milene will wait for the first 15 minutes, which is a very sensible thing to do in this kind of a volatile trade. Garden Reach Shipbuilders, 1% higher, fresh record high, 666. It's taking it away. Remember, this was Milene's pick. Zen Technologies, another drone maker, 3.5% higher, fresh record high, 855. Mastock and BDL are also gainers here. I'm looking at high beta in the market, which basically sets sentiment across the market. Okay, Tejas Networks, they've announced a 7,000 crore fresh order coming in from BSNL. The stock at 5.5% higher, 858. Milene, I'll request you to take a look at it, and I'll just come back to you. What else is sticking in the green? Angel One, 4.3% higher, 1781. I think it's mostly red today. Let's look at rail stocks. Where do we see good traction coming in? Jupiter Wagons, 5% higher, 272.40. You heard the management on BTTV last week. Railtel, 1.9% higher, 169.50. Titagarh, Texrail, and IRFC are also in the green. Milene, coming back to you. Tejas Networks, what do you think? 5% higher, running very sharply on very strong news.
See, actually, if you see Tejas Network weekly chart, 4 weeks back only, there was a good price action with good volume. And then for last 4 weeks, it is consolidating. And today, this news has come in. And now on the daily chart, it has to close above, say, somewhere around 800 and 850 levels. If it closes above 850 levels, then you could expect a good move in this stock, which would take this stock to 900 and 950 levels.
Okay. 2 or 3 more
Sakshi,
stocks
what are
that.
you watching?
Yeah, Shell, actually 2 or 3 stocks that are moving up quite sharply in an otherwise subdued market. Pennar Industries, that stock is up 7%. Of course, the news flow was that the company bagged about 700 crores order, and the stock has really moved up sharply after that news flow day. 6.5% right now, up at 92.15. JSW Energy, let's look at this stock as well. That stock is also ticking up on my screen. About 3.5% right now, 359 currently. HCC, another stock that's up by 3% in today's trading session. These are the stocks that are moving up. Milene, anything from these 3 stocks that attracts you at these levels?
Coming to what you said, JSW Steel, it has got a good weekly formation, and again, it is making a higher top, higher bottom formation on the daily as well as on the weekly chart. But currently, it is slightly extended, so aggressive traders can keep a stop loss somewhere around, say, 340 levels. On the higher side, you could expect 380 and 410 in couple of weeks.
Right. Uh, just the right time to get Gaurang in. So, Gaurang, I don't think so. You are worried about this 83-point dip on the Nifty. It's fairly fine. I mean, 19,200, 19,300 is where we see some kind of support coming in. And with the IT now moving back into action on the long side, perhaps it's a market opening that you would be comfortable with.
Absolutely. And like I mentioned, Shell, I think these 1900, 300, and little bit below that are the levels where we've been last week and the week before. So, and at those levels, we do see buying coming in select sectors and stock specific from a long term point of view. So, our sense is that you will see dips as a buying opportunity, but it's not going to be a very easy for us to come out of this range of 19,200, 300 on the lower side. I'm talking about Nifty spot, and 19,500, 600 on the higher side. It's going to be a 300 to 400 points range on the Nifty, 1,000, points on the Sensex, wherein we'll be spending some time consolidating. And I think it's good, after the highs that we did see a correction, and now we are consolidating. I think it's a typical behavior of the market, which normally happens after markets have seen an all-time high. So let us give it to the market. I think this consolidation is a good period for base building exercise, as we call it, and probably this will help us to withstand the next up move and stay over there and possibly go towards the next new high in the future to come by. So I'm not really worried about this 80 points correction on the Nifty or 300 points correction on the Sensex. Maybe we may slip a little bit lower. There is absolutely no denying about it. But all those dips, like I mentioned during the beginning of this program, would be a buying opportunity.
Right. Mileen, your view on Infosys again, it's inching up about 1.5% higher, contributing about 20 to 25 points to the Nifty, rise in today's trading action. It's a gap up for Infosys again. Your thoughts on Infi?
On the daily chart, if you see for last five trading session, it was trading sideways, and today we have a gap up opening, and the 200-day moving average line is somewhere around 1433. Once Infosys starts trading above 1433 levels with good volumes, then yes, the focus will change, and there could be a trend reversal in this, because whenever a stock starts trading above the 200-day moving average line, it attracts attention.
Right. Let's stick with Mileen and show you the chart of Garden Reach Shipbuilders, requesting the PCR to fire a daily chart. Fabulous call, Mileen. Full marks to you. And to stick your neck out at a time when the broader markets are correcting sharply, and to give a stock which has broken out tremendously the day before, and it works perfectly. Fabulous, fabulous. Would you care to recap your pick on Garden Reach?
Shell, in our organization, where we are giving calls to the traders, we keep a strict this our motto is you have to have a good proper risk to reward ratio. If you're taking a risk of say 100 rupees, then you have to give 200 rupees should be your reward. So that is a winning strategy in the market. So, see, we pick up stocks which are consolidating at current levels, and even on the weekly chart, we need some consolidation. Then only we recommend this. Our target for this, our first target is 704. So we had recommended this stock at 630 levels, and I'm expecting a move towards 704. That is one target over.
Okay.
Luck favors the brave, and only those succeed who manage risk fantastically intraday, and Mileen is one of them. Fantastic move that you see coming in on Garden Reach Shipbuilders. Remember, this call was shared before markets opened. Sakshi, over to you. You find something interesting in the PSU basket.
Yes, Shail, and we have discussed this space quite extensively even before with both Milleen and Gaurang. The power space, we've discussed, NTPC, power grid, a lot of, power-based stocks right there. I want to now ask you, Gaurang, on SJVN. Like I was mentioning, the company has signed a power purchase deal worth 7,000 odd crore rupees. Remarkable move on the stock over the last 6 months. I want to ask you, is this a mini NTPC in the making? Because, the recent milestones talk about how it has been declared a mini Navratna. Of course, the mega plan for RE transformation going forward, the nodal agency for both solar and wind power it is, along with the others, at 57.9, about 1% up in trade today. How do you look at SJVN?
So I hope this mini Ratnas do reflect the, value of a jewel. But unfortunately, not only SJV and Sakshi, but even NHPC, both these stocks languished below the floor price or the IPO price that they got, issued at, and then the listing and then the underperformance. Uh, Power sector and power transmission and distribution, power equipment. I would put all these three sectors together because it primarily these sectors are counter dependent on each other. We are extremely excited about it. I'm absolutely clear about it. There are some private sector companies in this, and there are public sector companies. So amongst the power generation, we like NTPC, Tata Power, Torrent Power, CESC to name a few. Amongst the transmission and distribution, we are extremely positive about Power Grid. Amongst the equipment players, power equipment players, I think companies like KEC International. I would want to be positive on SJVN and HPC, but the problem is, first of all, we don't have a coverage. Secondly, consistency in earnings is something that I would like to see before decisively, giving out any kind of a buy call, which we don't have right now. So I can't really comment on buy, sell, and hold on SJVN and NHPC. But it's a good change for all those investors who have been patient enough with these stocks as far as their investment is concerned. And I hope they deliver on the earnings front.
Right. Sakshi, in particular, SJVN, we've seen very, 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 very painful days. Uh, I can't even begin to tell you how, stocks in the PSU space have tested the patience and the valuation metrics of gentlemen like Goran and, of course, Milin. Remember, the most recent high, of course, you see is a record high of 58. But previous to that, it was, something like 39 rupees, and the stock's really done nothing since it got listed in 2010. So these are very, very long-term breakouts that are coming in. But a couple of things I need to point out. Let's get Milleen back on the screen and also Garden Reach Shipbuilders. The first target Milleen has been hit, which was 704. The stock rocketing now at 712. Of course, a fresh record high since Monday's volumes were phenomenal, perhaps the highest in 2023, if I'm not mistaken. Yes, they were highest in 2023, 8.4 million shares. So today's volume is a bit, overshadowed, but still 1.2 million shares traded. Milin, we doff our hat to you. Uh, Fabulous, fabulous pick. What now?
I would rather book some partial profit over here because it has already given a 1:2 risk to reward ratio, and I'll keep the remaining quantity for further move towards say 750 to 775 levels.
चलिए ये तो बात हुई आज गार्डन बीच की दिल गार्डन गार्डन हो गया स्टॉक प्राइस और मार्केट एक्शन देख के fabulous as always Milin, thank you very much for this one. Let's get you on another stock that's sticking very well, and that's Bank of Maharashtra. I would request Gaurang to also step into this. Gaurang, deep, deep, deep value, fantastic earnings, and the market's appreciating the rally that you see on Bank of Maharashtra. Let's get Milin's view first on what he has on charts as far as this high beta, low ticket item is concerned, and then I'll come to you. close to 40 million, still 50% of its all-time high.
If you see the weekly charts, the last week was a strong breakout again with good volumes, and now it is continuing its further move. At present, I would say that if one is holding this stock, should trail the stop loss toward 36 or 38 also he can trail this 36, and on the higher side, it can move towards say 42 to 45 levels.
Okay, 42 and 45. Gaurang, would you step in on Bank of Maharashtra? In the meantime, I'll rustle out some financial details that should attract your attention.
Again, over here, Shail, if you ask me very frankly, the kind of news flows over the last at least couple of years and an overhang and inconsistency in terms of earnings is something that keeps us away from covering stocks like Bank of Maharashtra, Central Bank of India, or some double digit public sector banks, purely because of the concern on the earning visibility, growth visibility, and a rabbit coming out of the hat. That kind of gives us a very unsettling kind of a feeling. I would rather go and buy PNB or maybe a Bank of Baroda, or even as a matter of fact, names like smaller private sector banks, IDFC First Bank or City Union Bank, on which we have a buy coverage. Putting money into Bank of Maharashtra or any other double-digit valued bank would be calling for a lot of unnecessary risk. I would put it that way. So I would be better off buying the names that I've mentioned: IDFC First Bank, City Union Bank, or as a matter of fact, PNB.
Fair point, and well taken. We've seen a very, very sharp breakout happening on Bank of Maharashtra last week. Remember, the price that you see of 35 rupees that happened last week was the highest since December of 2022. And the 39 rupees that you now see is highest since March of 2017. Remember, these are very, very strong breakouts that are happening. Gaurang puts a red flag as far as fundamentals are concerned. And let's also look at them. Price to book of 1.7 compared with 2x, 3x, 4x that you see on private banks. As also the fact that it's trading, its PE is well below industry standards. And the company's market capitalization is just 27,000 crore rupees. So a bank that dominates India's most industrialized state, which is Maharashtra, is at 27,500 crores. Mileen, final word to you in terms of a longer term price target on Bank of Maharashtra, if you have any.
If this momentum continues and if it holds, say 38 levels, then yes, we could see the even levels towards say 50 and 52. It can achieve on the weekly chart.
Okay. Okay. Right. There's another stock that's ticking up, and that is Coffee Day. And we are seeing a move of around 5.5–6%. The company, remember, has reported its earnings. It swung back to black, 22 crores of profits in the first quarter of June 2023. I know for a fact that Shail is a big Starbucks fan, but I want to ask both of you, Gaurang and Mileen, your thoughts on Coffee Day and this whole space. Does that attract you at all? Gaurang, starting with you.
So, Sakshi, I would rather go in for a company like CCL Products Limited. Unfortunately, I am not at the liberty of speaking on companies that we don't have a coverage. And also rightly point out at this point of time that there are news flows which are still an overhang on this particular company. So if you're really looking at, consumption-driven stories, then CCL Products would be something that I'll be extremely comfortable with.
Okay. Mileen, what about you?
See, if you see the monthly charts also for last 4 months, the stock is not doing anything. And again, this stock is clearly trading below the 200-day moving average line, which is at 40 paisa. And I would give a pass because even if it opens up with a gap today, but it is not shown a strong momentum in today's trading session. So I would not recommend this stock at current level.
All right. Well, at this note, let me just thank Gaurang for being with us. Always spectacular to have you with us, Gaurang, with all your wonderful picks and the Jugalmandi that you share with Mileen. We'll continue the conversation with Mileen going forward. Hope you have a great day. And thank you so much for joining us on the show. Shail, on the F&O space as well, we are looking at a lot of stocks that are moving up in trade despite the, benchmarks not really doing too well, especially in the IT pack. Again, apart from Infosys, I'm also looking at Coforge that's moving up quite sharply. Mileen, your thoughts on the mid-cap IT space? Anything that attracts you at this point?
See, if you see Coforge is a stock which is making a good pattern, a rounding pattern on the weekly chart, which clearly suggests that there is steam on the upside. And at current price, one can keep just a stop loss of say 100, rupees. On the higher side, yes, you could expect this stock to test 54.50 and 55. 53. 54.50 and 5500 levels. So one can trade with positive bias in Coforge.
Yeah, I can hear you. Can you hear me?
Right. Okay. Apart from this, Mileen, a lot of other stocks as well. Pennar Industries, do you have a thought here? 6% up in trade. What does one do after this strong move?
At present, the risk reward is not in your favor, so I would not rather comment because there is no trade setup in this counter. Wait for some consolidation and then take a call on this stock.
Okay, got that. Shail, anything else that you spot?
Yes, let's look at the broader markets again, Sakshi. The rallies, of course, in IT, as we had mentioned before markets open. Infosys and HCL Tech are the two ones that are really taking it away. Sakshi mentioned Coforge, that's the top player as far as markets are concerned. And we have about 16 stocks in the IT space, of which 14 are in the green. So clearly, this is the space to be, and high beta doing very well here. Mileen, one of the high beta stocks is Tech Mahindra. At the moment, at day's high, and trying to do a swing trade to reach out to 1272. Would you imagine it has that much of strength, or these are just fake moves?
Yeah, I will wait for some more time. But Shell, yes, I would recommend one stock in IT sector, that is Infosys. If you see for last 4 weeks, it is making a rounding base pattern, and even on the daily chart for nearly 10 to 20 trading, nearly 10 trading sessions, if you say it is consolidating. So this is a peculiar up move tendency. On if you see on 21st July, it made a strong up move with good volume, and then the volumes have dried up. This clearly shows that the volatility here has completely dried up. And if it gives a strong breakout today in today's trading session above say 2400, yes, then you could see this stock testing much more higher levels of say 2600 to an outer extent of 2700. So I'm very positive on Infosys.
Okay, right. Let's now also take our corporate radar section right now before we come back to you, Mileen. So please do stay on with us. Let's focus on the company Sriram Properties. The company has reported its earnings and it has registered a net profit of about 16.6 odd crore rupees in Q1 compared to 10.5 crore rupees in the corresponding quarter of last fiscal year. We've also seen it posting a growth of 59% year on year on this front. The revenues have grown 10% meanwhile as well. And joining in to discuss more details into the earnings, is the company's top management. Gopal Krishnan joins in, the Executive Director and Group CFO of Sriram Properties is with us. Very good morning to you, sir, and thank you so much for taking the time out for this discussion on Business Today TV. With me is my colleague Shail Bhatnagar too. First question to you is on the demand scenario clearly. In the space that you work in, especially after all those rate hike cycles that we've seen and the recent pauses that have come from the RBI and the outlook on the festive demand going forward. If you could shed a light on that first.
Good morning to everyone. So it's a beginning of a peak season for us. Our good seasonality starts from mid of August in southern part of the country. Overall, market trends are very strong. Despite all the fears and apprehensions some of us had on the RBI rate hike impact, I think the underlying demand has done very well. Continues to remain robust and augurs well for all residential players, including us. The seasonality, as I said, starts now and it continues till mid December, and therefore all of us at Sriram are getting ready to capitalize on this positive uptrend, and therefore we are lining up launches for this Q2 and Q3, which should, I think, give a significant boost to our overall volumes.
Good morning, Mr. Krishnan. Your company's IPO came somewhere in December of 2021. Almost about 18 months have passed. The IPO was at 118 rupees. And if you see the stock prices, somewhere half that value. So it's been a disappointing 18 months, especially for shareholders who've been with you for the first day onwards. Over the next 2 or 3 quarters, what does the pipeline of Sriram Properties hold so that their faith in such a strong brand from down south in the real estate space may be validated? What are your order books? What is the million square feet that you're looking to sell when it comes for the second half of this financial year?
Yeah. So there are 2 parts to the question that you raised. First is about the stock price movements. As you know, we had a not so satisfactory start in the market with a variety of factors, mostly macro. But from our side, we had been delivering consistently on the promises that has been made in terms of overall operating performance as well as financial performance. We made a turnaround post-listing the first financial year, FY22. We had a modest turnaround. FY23, we had a 68 crores of profits from a negative territory that we had in the past. So consistently, quarter after quarter since IPO, I think the volume performance has been good. Operating and financial performance has been good. I think the liquidity overhang is a concern that we believe market is focusing on, with private equity investors holding 35% of the company post-IPO. I think a part of that has got solved as well in the month of March. Then the stock got a little bit of a re-rated and trading at a higher band now. While we are concerned about the stock, I think our focus should be on delivering consistent performance, and at some stage market will recognize the strength of the financial performance and the market position that we have. So we remain focused on operating and financial performance, and we continue to deliver consistently improving results. Coming to our financial outlook or operating outlook for the next couple of quarters, for remainder of the financial year to be precise, we are on track. We had guided the market on delivering about 4.8 million square feet of volumes as a sales volume for us. Should deliver about 2,500 crores of revenue sales value for us. I think we are on track, and that's going to be supported by about 11-12 launches. 2 of them were launched during Q1, and we have another 3 launches lined up for Q2, 2 in Chennai and 1 in Bangalore. And we have another 3 launches in Q3 and 4 launches in Q4. Overall, the pipeline is very strong, and they're all getting ready for launch. From an ongoing portfolio, we have about 23 million square feet of ongoing projects, which 21 belong to Sriram, rest belong to the landowners. Out of the 21 million square feet, we have almost sold 80% of the projects, and therefore the remaining 20% will get sold as we progress the projects. And on a completed portfolio, we have 0 inventory. So that's kind of operating pipeline, which is looking very robust and very strong. With the improving scale and size, I think the financial leverage will kick in, and therefore we see continuously improving financial performance over the next 3 to 6 quarters.
Right. Mr. Krishnan, if you could tell us what is the inventory you are sitting on right now on the completed projects, and also if I have to ask you for the entire fiscal year 2024, what could be the total value of sales that you are anticipating?
We have a zero inventory on completed projects across over the several years that we have delivered almost 13,000 units, completed and delivered 13,000 units. We have a near zero inventory in those projects. All our saleable stocks are in ongoing project, which is basically a work in progress stock, and that's what I mentioned. We started off this year with about 5 million square feet of saleable inventory in ongoing projects. Rest all completed projects has zero inventory.
Okay, and 5 million you've shared already. What about next 3 to 5 years? Could you double, triple this figure as well?
So for a full year basis, as I said, we are targeting about 4.8 million square feet of sales this year, and we expect at least to grow by 20% plus in volume terms. In value terms, this year you asked about, it's about 2,500 crores of sales value that we are aspiring for.
Right. Just one last question from my side, and that is on the gross debt levels that has reduced for you. But what is the kind of vision that you have on the reduction on the debt going forward? I mean, like we've seen about a 12% lower debt for you at 488 crore rupees.
Yeah, on a debt position, currently the quarter ended, we had about 488 crores of gross debt, 400 crores of net debt, plus or minus a few crores here. And this included a debt we assumed in the month of May as part of the acquisition, which is getting redeemed this week. Therefore, we expect to end the quarter with close to about 300 crores of net debt, and we expect the year to end with a much lower net debt at the end of March 23. So we have been working towards a zero net debt over the next 12 to 18 months. I think we are on track to deliver a zero net debt during this period. On the cost of debt, as you would appreciate, when we went IPO, we were about 14% cost of debt. 14% was our weighted average cost of debt. Today we are at about 11.9, 12, and we expect to end the quarter the second quarter, we would be about 11.3, 11.5. This is despite a 2% increase in benchmark rate. So we have done meaningfully better over the last 12 months in terms of bringing down cost of debt. Our endeavor is to keep moving down further, but I think we see another 50 to 100 basis point downside potential in our interest rates.
Mr. Krishnan, final question to you. Primarily, Sriram Properties is seen as a south-based real estate developer. You have a very, very strong brand working in your favor, and of course, the backing of a very well-known industrial group. What are the hopes, plans, and maybe some signs that we can see you expanding in the west, east, and north part of India?
Yeah. So as a brand, we have established ourselves very strongly in Bangalore and Chennai. They account for about 85% of our volume. These are two big cities we operate in south. We have a presence in Kolkata, which accounts for some part of our overall volumes, where we have a large land parcel which is being developed. Other than these three markets basically account for 95% of our today's volumes. We are aspiring to look at a couple of more new markets. We have stated publicly that we would be evaluating Hyderabad and Pune in the near term. We are making some efforts. I think we will make a cautious evaluation and make a cautious entry into these markets over the next few quarters.
Right, Mr. Krishnan, thank you so much for your wonderful time and of course the fantastic earnings that you've posted. We hope that long-term shareholders who joined you since the inception would definitely see the stock outperforming in the coming quarters. Thank you so much for your time. Coming back to Millie, and before that, let's do a market check again. So the Nifty's tested the first support level of about 19,310. For the moment at 19,373 in front of us. Fairly Uh, nice traction coming in across the border market. I see a lot of stocks from the high beta space like IRFC making fresh intraday highs. Cochin Shipyard is following the footsteps of Garden Reach at 725. And fantastic moves coming in Wipro 418.90. Melina, this question is for you since you've seen multiple bull markets over the last 3 decades. Uh, let's take this one by one. We've seen blue chips correcting fairly decently since mid July to mid August. At the same time, there is zero correction. I request the PCR to fire the Nifty mid cap index and Nifty small cap index in terms of daily charts. Absolutely no corrections there. Milin, as an experienced trader, what would your strategy be for mid caps and blue chips?
Shall actually, we at Aryan, we keep very close watch on Nifty 500 because Nifty 500 is such an index which prefers it gives a broader aspect whether there is a broad-based rally which is going on. Now, even if in today's trading session, if you see the breadth of the market is still positive. Now, the mid cap and small caps are included in 500 also, but again, if you see the 500 Nifty 500 has not crossed the previous day high, whereas Nifty is also trading just close to it. But see, 50-day moving average line, both in Nifty as well as in Nifty 500, is very important going forward. So as long because Nifty 50-day moving average, both in Nifty 50 as well as in Nifty 500, it is rising. So we don't if the slope starts getting flattened and then goes down, then it is a real problem. But at present, I would bet that Nifty also would be taking good support at the 50-day moving average line and even the hourly charts. Now today, now already we have there at 10 o'clock. Now even the hourly charts are planning out good. So if the first pivot level is being crossed in today's trading session, that is 16,790 levels, then today's low would be my stop loss, and I would play for a higher level of 16,850 and 16,099 level. So I'm positive. Sorry, the 16. This is for Nifty 500, and for um, Nifty spot, I'm talking about 19,386. If it starts trading above 19,400 levels, then again you could see the levels of 19,450 and 19,540, 514 levels. So we keep a very close watch on Nifty 500 and Nifty 50 levels.
Okay. Right. Milene, some of the stocks that I'm looking at from the small cap 100 basket, especially from the PSU banking space that are moving up, you know, Indian Overseas Bank, you can also see Central Bank of India really moving up in trade right now. Some of the other banks also that are moving up, any of the UCO Bank as well. Your thoughts here? Any of the banks that are interested in you at this point?
We have earlier discussed about Bank of Maharashtra. I would rather keep my bet on Bank of Maharashtra only because I feel that still the move is on and you could expect say 7 to 8% rally from current level in Bank of Maharashtra also.
Okay. Right. Milene, anything else as far as the pharma space is also concerned? You know, Piramal Enterprises, Syngene, these are the other stocks that are moving up in the F&O space. Very, very sharp moves right here. Anything that interests you from here?
See, in the pharma pack, I would rather go out of F&O. Today, even on Monday, we saw good sharp move in AstraZeneca. But then again, there was a big VIX which was created on Monday's trading session. But now today's trading session, again, it is trying to cross the previous day high. So I'm keeping a close watch on AstraZeneca. if it moves above the Monday high of 4266 levels, 4266 levels, then yes, we would initiate a buy call in this because we are very positive on Astra.
Right, Sakshi. Let's look at the broader markets. As I had mentioned at the earlier part of our commentary, there is absolutely uh, no issues in the high beta space. The broader market, the indices might be correcting, but really there's no let up in speculation. There is no let up in stocks that are in the cash space. Let me share a few names with you. Tejas Networks, 4.5% higher, 852. Hindustan Construction, 2.3% higher, 2640. Market favorite Suzlon, let's stay away from it, but it's trading 1% higher, 2025. Similarly, we have CSP Bank, 1.5% higher, 309.30. Delivery, 1.2% higher, 418. Zomato, 2% higher, at about 95.10. I'd just like to touch base with Milene on Zomato. Very, very sharp rally, Milene, that happened, and the stock then corrected from 100 to 94. What are the charts telling you? Keeping in mind that the company may have announced a notional profit in the quarter gone by.
See, it has corrected. You have rightly mentioned it has corrected from 100 and levels and then back to 95 levels. Now it has got good support at around say somewhere around 92 and 90 levels. Now if it holds that level, then again you could see an upswing towards say 104 and even to an outer extent of 110 level. Because if you see, it is clearly outperforming the benchmark indices and it is maintaining a height of higher bottom formation. So I would aggressive traders can go long with a stop loss of 92. On the higher side, you could expect much more higher levels of 110.
Right. Okay, let's quickly look at what are the big movers at this point in time as far as the markets are concerned. You know, the indices, especially it's the Nifty IT, then the Nifty PSU Bank, the Realty Index, the FMCG Index. These are the bright spots for you. On the top Nifty gainers front, you do have stocks like Infosys, HCL Technologies, even Tech Mahindra moving up in trade. Those are the big movers from the Nifty IT pack. You have ITC at 453. That's also moving up from the FMCG basket. You do have SBI. That was another call given by Gaurang earlier this morning before the markets opened, 0.7% higher in trade. Wipro and of course these are the other IT names that are moving up very, very sharply. HUL also from the FMCG basket, about 0.25% high in trade. Capital goods major L&T, very strong move. The second top mover in the last one year when we talk about the top Nifty movers, and it's still up in trade. BPCL up 0.5% in trade as far as the Nifty gainers are concerned. Shail, anything from the broader markets that are moving up now?
Sakshi, I would just say that the broader markets are just not paying attention to what's happening on the Nifty and the Bank Nifty. Remember, two things. The Nifty Bank started with a downtick of 400 points. It's just now down 260. So let's just check that. It basically means that the 100 DMA has been retested, although the index is below that. So a low of 43600 and a current tick of 43820. So it's about a 200-point bounce on the Nifty Bank and about a 60-point bounce on the Nifty from days low. And remember, uh, when Milling came in immediately, he mentioned that he's positive on the Nifty and he's interested in buying the dip. So that's working pretty well. And two or three stocks which may be in the red on the index level but are at days highs are the ones that I'll tell you. HDFC Bank, remember, it's at days high of 1593, even though the stock is down uh, So day's low was 1581. It's at 1594. Similarly, Reliance Industries is at day's high. Remember, it's still down 0.5%, but the day's low was 2551. And Infosys is in the green, Sakshi. So these three heavyweights are the ones that set the sentiment. Infosys in the green, Reliance
Absolutely.
at day's high, although in the red, and HDFC Bank day's high, although in the red. So we're looking at probably a very nice uptick from current levels. Let's take Milene's view in and then wrap the show.
On Nifty, Shell, you want on Nifty?
Yes, sir. Yes, sir.
See, I've already mentioned that looking at the chart of the Reliance, I don't expect much fall in Nifty. And now, if you see the hourly charts, it has made a first time a higher high. Now, on the hourly chart, it is forming a doji on the S1 support level. Once the pivot level of 19,400 is being crossed during the day, then you could expect a move towards 19,450 to 19,500 level. Now, coming back to Bank Nifty, now Bank Nifty on the hourly chart is clearly making a lower low formation. But if you check the RSI on the Bank Nifty, it is slightly making a positive divergence, which is a sign of that yes, we could get a pullback in Bank Nifty from current levels, because it has already fallen back very sharply. Now one has to wait for Bank Nifty to close above, say, somewhere around 43, 990 levels. That level is being crossed. Then you could see during the day, we would get some positive momentum in this Bank Nifty, which would head higher to test the levels of, say, 44, 250 and 44, 430 levels. So these are the pivot levels which we are working on.
Okay. Well, on that note, thank you so much, Milene, for being with us on this show and sharing the fantastic pick of the day. Garden Reach Shipbuilders now 9.5% up. All-time high levels we've seen today, 718. So brilliant pick right there, and that was shared before the markets had opened. So congratulations to you, and spectacular move on that one. Many thanks, Shail, for sharing all these wonderful insights on the data points and the stocks that are moving up the markets higher despite the surface move, which is down on the Nifty as well. We'll wrap it up at that, but do stay tuned on Business Today TV to catch all the market move and all the business news that will move the markets from here on as well. We'll continue to track the markets for you in the half-time as well as the closing time report as well. Right now, the Sensex down by 181 points at 65,221. The Nifty lower by 67 points at 19,367. We'll wrap it up at that. Do stay tuned, and don't forget to also subscribe to this channel and continue to engage with us on other social media platforms as well. Until then, many thanks for tuning in.
Hello and welcome to Business Today Television. You're watching Market Today. I'm Siddharth Zarabi, and with me is my colleague Sakshi Batra. Our markets continue to remain volatile, and Mount 20K on the Nifty still seems elusive. So where are the markets headed, and how can you continue to create alpha on the street? For all those answers and more, we have one of India's best stock pickers